Good morning, team. Happy Friday. Okay, so what a day yesterday, huh? I mean, incredible, right? Look at this bar. I was talking to a friend of mine early in the morning yesterday, and I was telling him in really, really early in the morning, even before the market opens, that I had a feeling we are going to have a hammer candle yesterday, which is like when you gap all the way down, but you reverse and end up on the high of the day. That's called a hammer. You have one of these, woo, and then we go back all the way up, and then we finish up here. That's a reversal candle. Pretty strong move. If you notice, here's the H pattern, right? And then here's the neckline, and then broke it. And then what happened? This is called a shakeout. It shook everybody out expecting this, and then boom, reversed back up higher. Again, we were in a market timing below 10. We were at 5 or 4 at one point. So when you stretch a rubber band really, 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 really far, it has a snapback effect. So the more you stretch it, the bigger the move, the faster the snapback. And here we go. We went from like almost being 300 points down, 400 points down pre-market to being up 400 points in the day. I mean, that's just tremendous price action. The volatility is incredible. But again, let's keep everything in perspective. We are below the 200. We are below the 50. We are on a downtrend. The 50 is pointing down. The 21 is pointing down. The 9 is pointing down. And the 200 is kind of getting flat. So, again, I am not getting positive in this market, and I'm not buying, shares on a aggressive basis until we break the 200 going up. Okay, at a minimum, this lowering trend line, we got to kind of reverse back and then do this, go the next little cup, and then go sideways for the handle and then take off. Until I see that, I'm not getting aggressive on the long side. The SPY, the S&P is relatively a little bit stronger, but still below the 200. We had the same kind of H pattern, broke the neckline, reversed up. Strong move. We're a little bit up pre-market. The futures were down by when I got up this morning around 4:35, they were down, and then they reversed back up like 150 points because we were down like 120, something like that. We're up like 40 points right now in the futures. So it's a reversal again. MT's at 25, still on the low side. I'm thinking we're gonna get a nice little bounce and it can probably sell off. I don't know. I'm just gonna watch price action. Another thing I want to kind of mention to you guys. Notice my charts. All I have is volume. I don't have any other indicators. I don't have RSI, MACD. I don't have any other things like that. Volume and price action, and I have the moving averages. That's all you need. Try to cut out the noise and the distractions in your chart reading and in your trading profession. Don't watch the news. Don't listen to pundits on TV, Fox, CNBC. Don't have the TV on when you're trading and when you're watching the markets. All that's going to influence you subconsciously, and nobody knows. It's all opinions. Just price action. Below the 200, very bad. Below the 50, bad. Above the 50, good. Above the 21, which is above the 50, great. Power trend right here. 50, we're above it. 21, 9, we're above it. What's happening here? When we reach the 50, we bounce off it. When we reach the 50, we bounce off it. We bounce. What's happening here? This is, you print money here. You print money. What happens here when you break the 50? You get choppy. You get choppy. You get choppy. You're going to lose money here. You can lose money here. What happens when we break above the 50 again? Right here. You're printing money. That's all. It's very simple. Trading is so simple. If you just keep this concept right here, below the 50 is bad. Below the 200, it's like death. Get out. Like, don't even do anything as far as going long. Once we broke above it, then you start nibbling and you have your watch list ready. Please, just cut out the noise. I mean, look at this. Awesome, awesome move here between, end of December to like, let's say like here. A month and a half. You can make a lot of money here. You can make good money here. You can make tremendous money here. And just stay out. stay out. You know, stay out until you get back over here. And then once you break it, get out. Stay out. That's why I'm selling premium, because if the VIX is at plus 30, very volatile, very high volatility. So premium is high. So when you get this choppy whip action, you're gonna get chopped around. You're gonna have a lot of drama and stress. I'm selling premium and I'm getting also whipped around, but I'm taking advantage of it. When we have a big down days, sell some premium. When we have a huge reversal, take quick profits, and then I sell the top side. We went all the way down, selling premium. We got back up again, get out, and then I'm selling cover calls here, and then we go down, I make money on cover calls, and then here, this reversal, I took profits yesterday. If we have a nice little update today and tomorrow, today and Monday, when we get up here, and let me clean this up, it's getting messy. When we get back up here again, I'm selling cover calls here. I'm selling naked calls. Actually, I don't have any shares, so I'm selling calls here because I'm expecting this. This probabilities are gonna, and if we do this, we're awesome. I have my shorts that are gonna keep going up, and then I cover. Simple as that. But then once we break above here, then I'm done with this. I'm done with the selling premium. I'm looking at breakouts, because breakouts are going to start working. Breakouts work when we get above this crap here. See? Breakouts, you buy here, breakouts work. Something like this, when you have a little breakout here and you get above the 50, they work. So just keep that in mind. Just cut out the noise. Just focus on price action and volume. Volume, because when you have a price move and there's corresponding high volume, that's conviction. So that's good. When you have this huge red days on down days, that's a lot of selling. When you have down days on lower volume, then you start looking for the pickup. You see? That means there's convention here. This is gonna go. So just look for price action and volume. Don't look at anything else. Now I have a few stocks I want to go over just to start getting a watch list ready. But again, not too aggressive. I'm thinking we're still gonna get chopped around, but I want to give you ideas for when we do start trending, things to look for, and price pivot points to look for, and then some education along the way. So let's start with the first one, Hess. I'm looking at Hess at 97.10. So basically, I want to clear this little range right here. Once we clear this top bar right here, which is about 97.10, I'm looking at Hess. So again, all these stocks I'm going to go over, they might not act today, they might not act on Monday, Tuesday, but put your alerts on. Like, let me show you here. See, I have an alert. I have a trend line put here. I have an alert. If it breaks this, I'm going to get alerted. It could be tomorrow. It could be today. It could be Monday, Tuesday, whenever it is. But that is still a good trigger point. So all these stocks I'm going to give you, and all these ideas and price points, they're good. They're good. They're just good until like forever. Until like if it happens. If it never happens, then that means you never got in and you saved money. And if it happens, you get in and if it happens on volume, okay. So once you have that 97, let's say here 97.10, once that does happen, look at the volume bar, and then maybe go down to like a 30-minute. I mean, look at this last volume. Look at this last move, the last 30 minutes of the day, high volume. That was conviction. So that means that this could work. So again, choppy. So you want to see when it breaks these highs here. But when you look at intraday and a price triggers, obviously the daily bar is going to be lower than previous day because the day is not over yet. So you go down to a lower time frame, a 30-minute, or you go down to an hour, and then look at the volume. Look at the volume bars, and then that will tell you if that's a strong price action. So again, if Hess breaks 97.10 at 10:30 in the morning or whatever, go to the 30-minute chart and look at the 30-minute bars. If there's higher than normal, the average volume, you can kind of tell this is kind of an average, price volume, and these are these are big bars. You can tell. So if you see higher volume then that means there's a strong backing of this move. If you see the move, but the volume bar is like low or low, like for example, look at this bar right here. I think it was right here, something like this, where lower volume, higher bar, but what happens? It goes down because there was no convention here. What happens in this big bar here? Let me see here. This one right here. Boom, the stock takes off. There was volume. So look for that, okay? Let me see the other ones. MEOH. MEOH, I'm looking at 49.10. 49.10, which is basically taking off this high right here. So if we take out this high right here, I'm gonna go. So now it's already it's pre-market at 50. I wouldn't chase it. I wouldn't chase it. I would kind of just look to see if there's volume behind it. But worst case scenario, also I'm looking at this little breakout here. So anywhere near 50 breakout, it'll be good. But just don't chase it past way past 50. Nice little cup here, and then a little handle. Boom. BYD. BYD, I'm looking at 68.98, which is taking out this little high. I have an alert here and have an alert here. This little lower trend line. This is a nice little base here, okay? And it kind of went down. And look at this big bar here. The volume wasn't great. The volume wasn't great, but it went all the way down to the 50, and boom! It held it right there. I mean, that's just amazing how it does that. How stocks do this. So that's a good sign. That means that there's people coming in and supporting it at that price. So again, don't anticipate it. Don't buy before the breakout. Wait for the breakout. Wait for the price with volume. BYD 68.98. The next one is CPG. CPG, I'm looking at 688. 688, basically taking out the high here. I have my alert set up. It's a smaller, smaller price stock, but it's got a lot of volume. So there's a lot of liquidity here. And look at this, look at this growth rate, 332 this year. I mean, it's just like, look at these numbers. So again, you can take a gamble here, 688, and you have a stop, below the 50, and maybe like 598, something like that, about $1. If you buy a couple hundred shares, that's $200, and then if if it does take off, like here when it broke here 543, let's say you bought it at 550, you went to 685. That's a pretty good move for a low price stock. The next one, EGY. EGY, I'm looking at 603. I want to break this high here, 603. Okay, I don't like this bar where it went all the way up and then reversed and closed on the lower end, and it did it on volume. Still an up bar, but I do like that it held at 21. It's kind of see all these bars here holding that. That's a nice little support area. So 497, 496, 494 will be a stop here. And I will be getting it at 603. Nice little cup here. See the tight action here on the handle. Once it broke it, boom. Kind of look at the same little thing here. It should take off. The next one, FANG. FANG, I'm looking at 135.61. FANG, 135.61. It's at 127, 128, so 135 is still a long way away. Because look, you get choppy action here. So I want to take out the high. Once it takes out the high, it could take off. And if it doesn't, this is your stop right here. It's been holding the 50. I mean, it took off, pretty much this from beginning of January. It's been holding the 50 pretty good. So there's a little consolidation here, which I like. Back here, once it kind of did this nice little cup here, and once it broke, it never looked back. You took it from let's say 103 here all the way to 114, and once it broke here 110 that day, you probably would have made 7 or 8 points. So that's not bad. And this would have been October 1st to in 15 days you would have made about 7 or 8 points on this. Not bad. So you're looking for this kind of same things here. See this little base here, 117.80. It probably would have been the entry. Would have gotten in here. and then I probably would have taken it to like 120. So look for that kind of price action. Zim, great stock, great company. Look at this growth. Look at this growth. I mean, from nothing to like in the 30s. That's just amazing. It's got earnings in 12 days, so we had time. It held the 50, held the 50, held the 50, held the. I mean, it's like. So I had this alert here, and I think I took this, and then I got stopped out again. So probably was a scratch. So I never did take this. I should have taken that entry right there. That would have been probably like 63, 64 to 68. That would have been bad. So that would not have been that bad. So I like how it held the 50 here. So I have my alert here. I'm looking at Zim at 70.61. 70.61. I want to take out the high here. Aggressive entry will be. Let me see the price action here. Yeah, it's got to take out this bar right here. So that's why I'm basing it on. So 70.61 will be taking off this bar here, which will be taking this downward trend line. So the stop will be the 50. So it's a loose stock. So don't go too heavy on this. MTDR. MTDR, I want to take off the 47.49 bar here. So 47.50, 47.51. Actually, let me take off this bar here. So 48. So 48.03. 48.03 will be an entry on MTDR right here, taking out this high bar here. Again, if it does it, then you buy on volume. Okay? APA, I want to take out this high bar here at 32.51. 32.51. I have my trend line here. If it breaks this trend line, it could take off. My stop will be, 29.49 around there, below this bar, below the 50, because it's been holding the 50 here. It held it here. It's holding it here. So if it breaks it, that means it's breaking character. So I don't want to be part of it. DAC. I'm looking at a break above this right here. So 93.37 around there. 93.37. So I'm looking at 100 play. And normally psychologically, when you get near 100, if you notice here, once it broke here, it got near 100, and then it kind of backed off. So if you buy it at 93 and it goes to 100 again, that's 7 points, not bad. And then once it does break 100, normally it goes up 10 points before it reverses. So just keep that in mind. See the little base here? Once it broke, took off. So they say you would have bought it at 90 to 100, 10 points. So this would have happened here, Jan 21 to Feb 4. So in 2 weeks, you would have made about 10 points. Not bad. 10%, in 2 weeks. IMO. I'm looking at right here. It's got to break this little shelf right here. So 44.87. 44.87. IMO. Stop will be below right here. If it breaks this little trend line. So again, if this kind of hangs around here for a little bit, this trend line will continue. And then once it breaks it, I'll get the alert. And then the last one as far as prices, MP. My shelf is right here, 44.07. 44.07. Again, it's whippy. But I mean, it's like this. It's just a lot of stuff. But I like this little base here, and it's kind of consolidating this little area right here. So if it breaks right here, these bars here kind of held it. So if it does that, it could go to 50. So I think that's a nice 5-6 point move. It just had earnings, so that's out of the way. Great growth. Look at these numbers. Incredible. Exponential growth. Top 20 group. MP. Now, I wanted to show you like a little lesson here on kind of price action. This right here, I don't like to be involved in. Look at these bars. Like they're huge bars. Where somewhere like around here you had nice little tight little bars, and then once it broke, boom, it took off. So you want the price action to kind of go like sideways in these kind of bars. You don't want like this. That's like too volatile. So just wanted to show you on that. And then ATX, this one, same thing. Look at this tight action here. And once it kind of broke that, you had a nice little move from, let's say, 88 to 94. And then once you came back inside the line, you would stop out. You will wait for all this to kind of, all this garbage to kind of come back, and then you build another base, 94 to 100. You gotta get out here, and then But look at this. That is extended. This is a stock. What I was saying before about once it gets near 100, say 93, 94, 95, it goes to 100. It reverses back in again, and then once it breaks 100, it goes to about 110. Look where we're at, 109. I would be pretty comfortable saying that 110, 112, this stock is going to reverse back. If you want to watch it, MATX, look at it, and I could pretty much feel comfortable that at 110, 112, I wouldn't even see this going to 115, but around that 110, 112 area, this is going to reverse back in again, maybe like back to that 100 or even lower. And then this will be a re-entry. So if it goes back down to 100, you will buy it. If it's at a moving average, let's say if the 21 catches up or the 9 catches up, you will buy it here with a stop at 98, waiting for the reversal up. But I don't see this going to like 115, 120 without first coming back into 100. That's just my speculation here. If you look at the weekly, again, look how extended it is from the line. So you don't want to buy when it's too extended from the line. Look here. When it gets too extended from the line, it comes back in. Look at here. When it gets too extended from the line, either the line catches up or it comes back in. So you don't want to buy here. You want to buy here when it breaks this little shelf, and then let it consolidate here. It reverses back in again. Then you want to buy here. Then when this happens, it comes back in again. It broke the moving average. You kind of wait for the consolidation. You see, tight action. It breaks it, boom. So this right here was like what, like 70 something to like 80 something. That's a nice move in about a couple months. So that's kind of what what you want to look for. You want to look for tight action. You don't want to buy extended. You don't want once it leaves the 21 and it's too far away from the 21. Let it go. Don't have FOMO. FOMO's for the weak-minded. We're not weak-minded. Okay, don't have fear of missing out. Let it come back. I'm pretty comfortable. This is not going to get past 112, 115, 113, and then before it comes back again. Because that's just psychology of traders. If you notice here, once it was in the 90s, got to 100, and where they have boom. And then once it broke 100 again, it finally did get to the 110 range. All right? Just wanted to share that with you guys. Again, the futures are looking nicely up today, but I'm looking at trend lines, and it's looking like it's getting to a higher upper level trend line. So let me look at see this right here. We want to see this break. I mean, this right here, it's huge extension. I'm pretty comfortable at like around where are we at, 342. I'm pretty comfortable at 344, 343. We're gonna see a reversal. Pretty comfortable with that. Worst case scenario, we might even get to 345. I do not see us getting past 345 on the Qs. We are 342. I don't see us getting past 345 with just straight up, like just keep going. I'm pretty sure we're gonna see something like this, and then maybe come back in, consolidate, which is awesome action. You want to see consolidation. Then once it breaks, then it's a true break. Okay? Nice. You look for these kind of things. Then the next level, it's up here, 355. You want to look for those things. Okay. See the cup here? Then you want to see a little handle. See this little kind of cup here? And you want to see a little handle, price consolidation, and then the break. Or even this little higher, which is the 345 I was referring to. So watch for those price levels so you can start learning how to read charts. Okay? I hope this helps, guys. Talk to you soon.